North American markets are in the green today, but in the U.S., the major indexes are barely crossing the line. And we have a new report from Challenger Grain Christmas that has a troubling outlook for layoffs. Let's go to Tyler Ellegard. He's president at Gradient Investments and joins us now. Tyler, first, just your reaction, please, to the Challenger data that there have been over 1 million layoffs in the U.S. so far this year.
Yeah, look, I think that's going to continue. There's some efficiencies that AI is creating, right? I think we've all been waiting for those efficiencies in these businesses to start, and we're starting to see some of that, especially on the tech side. But then on the consumer side, we have seen consumers weaken quite significantly here in the U.S., and so you're starting to see companies needing to right-size their staff to meet the numbers that they're putting out to Wall Street to meet the expectations that analysts have. And so you're starting to see more and more. I would expect those layoffs to continue as well.
Okay, I do want to talk about retail and consumer sentiment in just a moment, but markets are still in the green, so they're still going up. I guess there's just a deep hope here of a rate cut this month.
Yeah, I mean, I think it's almost, we're not going to guarantee anything, but there's a high likelihood that the Federal Reserve does do a rate cut this month. And I would also add on to that I would expect, with the changing FOMC members and the continuing weakening of the economic data that we're seeing, I would expect more to come next year as well. Right now I'm expecting about 4 to 5 next year. So more to come on that, but I would expect the Federal Reserve to do a rate cut this month.
Are markets still trading on optimism around AI, you think?
Absolutely. I think there's becoming a big bifurcation between the market and the U.S. economy, because we're starting to see unemployment claims rise. The unemployment rate is at 4.4. I think that continues to go up with the job layoffs. Now, there is some funkiness with the participation rate, and if people leave the workforce altogether, it keeps the unemployment rate somewhat steady. But generally speaking, I would expect that unemployment rate to start to rise a little bit from here. But it's also not a significant concern, because the 25-year median unemployment rate here in the U.S. is about 5.1%, just over 5. So we're still well below that. So it doesn't mean that it's a significant problem yet, but something that we're watching. But then you have all of the weakening economic data, and then you have the strong stock market from the last 2 years and including this year. And a lot of that is off the back of AI and the CapEx that's being spent on generating growth in that area.
Okay. We have seen volatility more in the last couple of months than we did at the start of the year, or a different kind of volatility at least. Do you think that'll continue for the year end and the start of the next year?
I do. And we started to see volatility pick up here in the last couple of months. I mean, we've gone from that base of about 15, 16 on the volatility index here in the U.S. And we've seen some spikes up to the mid-20s. And I would fully expect that to continue. And the reason I say that is you're starting to see some weakness on the consumer side, but then you have investors trying to understand, where is the return on investment coming from this AI CapEx spend that's seemingly going to continue to increase, not only this year from last year, but next year from this year. And so investors are trying to figure out and understand, when does this return on investment come, and how can we price that out in stocks? And so, a good example of that is a company, Oracle. They reported a stellar earnings in their last quarter report. Stock jumped about 45%. And you've seen the stock tumble from those levels, and now we're below their earnings stock price, where they reported earnings for their last quarter. And so you're starting to see investors trying to understand, where is that return on investment coming? Are these numbers really going to hold true? But I do think the AI trade can continue to push the market forward.
All right. The Thanksgiving holiday spending in the U.S. was strong. What does that tell you about consumers and where they are right now?
Yeah, one really interesting data point that we saw was the use of buy now, pay later for holiday spend. And it was actually at an interesting level, a lot higher than we were expecting. And so what we're trying to understand is, how does that affect the rest of the holiday? How does that affect the consumer the rest of the holiday season? Because if they're having to use the buy now, pay later on a Black Friday, where you're starting to see, you're getting the deals, does that mean consumers are really feeling stretched right now, and they're trying to cram all of their purchases onto that one day and utilize buy now, pay later, and not spend for the rest of the holiday season? So it's going to be a really interesting month here leading up to Christmas. as we understand what is the consumer doing, are they continuing to spend? Where are they spending? I think is another really important aspect of it. But I think consumer sentiment is pretty poor right now, just around the cost of everything that they're buying.
Has there been any foreshadow to that sentiment, what that holiday spending could look like for consumers in the U.S.?
I don't know if there's much of a foreshadow right now. It's just going to be as the data comes in and as companies report. I mean, there are some good out there. I mean, American Eagle, that company did raise their earnings guidance. So, there are some bright spots out there. But generally speaking, we're just going to have to wait for the data to come in to help us understand where consumers really at right now.
All right, Tyler Ellegard, I'm going to leave it there. Tyler's president at Gradient Investments. Thanks for your time. I appreciate it.
Thank you.